video is specifically made for beginner traders, and I really don't want to show my face because I don't want to get you guys distracted. Right, so I want you guys to focus on what we are showing, displaying on the screen. Right, so when I started forex trading, actually I stumbled across many beginner courses which actually teaches different concepts on different trading styles. But actually later I discovered that those videos, those courses are not really discussing the vital important needs for forex for beginner traders, right? So that is why I do this video, simplified it to the last, right? Simplified it to the last so that you can be able to understand whatever a beginner trader needs. Right, so let's dive into it. So forex, what is forex? A lot of people has been asking, what is forex? So forex simply stands for what? Foreign exchange. Just so simple, right? Foreign exchange. So this is a global market in which nation currency is traded for another at a mutually agreed rate. Just so simple, right? So we have traders like me and you, the retail traders. We have the hedge funds, the banks, the institutional traders, right? So all these traders who needs to exchange one currency for the other, and this is what makes up the market. So simple, right? So simple. So now compare this market to your normal physical local market where you see both buyers and sellers, right? So this is the same, but this is digital. So all your buyings and sellings is done online just by clicking a buy and sell button on your phone. Simple as that, right? Simple. So in forex markets, right? In forex market, currencies are paired. Currencies are paired. So you need to buy one currency while selling the other currency with the purpose of what? With the purpose to make profit from the difference in price exchange. Just so simple, right? Yeah. So what we want to do is to buy these currencies at low and sell at higher price. Oh God. So we have major currencies, right? Major currencies in the world, but actually we focus on the pairs with USD because USD is mostly used for exchange, right? So because of some of these currencies actually don't have much value, so that is why we have to pair them with other currencies before exchange. So example of a paired currency here. So let's say we have Euro USD. So we want to trade. We want to buy Euro using USD. So Euro as the base currency, while USD as the quote currency, right? So just so simple. So when we want to buy long, we assume the price wants to go bullish. And when we want to sell short, we assume the price wants to go bearish. You may be asking what is bullish and bearish. So bullish actually means bull. So it is a terminology. It is derived from the way these animals attack, because when bull wants to attack, it tends to raise you up from the ground, right? Which means raise you up, right? So that is bullish market. Why bearish is the vice versa of bullish, is the opposite. Like when bear wants to attack, it tends to strike you down, not you actually, right? So that is where these terms actually derived from. So simple. So we are moving on. So you may ask, how do we buy and sell? So this is simple, right? This is simple. You buy and sell on your brokerage account, right? So your brokers offers you the you press your buy and they take your order and place it in the market. So that is why they are called what? Brokers, because they also offer you leverage to trade it. It's so simple. So what are there are two main markets. We have the spot market and the futures market in forex, right? Later we'll dive deep into that one, but that is just this for now. So forex market is open 24 hours and 5 days in a week, which means you trade from Monday, Tuesday, Wednesday, Thursday, Friday, right? So except from the crypto market, because the crypto market opens 247. So we have 4 trading sessions. We have the Sydney, the Asia, London, and the New York. With these trading sessions, sessions have different trading time. So most of the volumes actually happens during London and New York sessions, because these times the market tends to present a bigger move, right? So some people has been asking how much can we make trading forex, right? So these answers actually depends on individual skill set and your trading account balance. That is equal to your return or your profit. So let's say, for example, you make a $20 in a $100 account, right? It means that you make 20% of your trading capital. So it's still the same as making $2,000 on a $10,000 account, right? So it's still the same 20% return. So how do we make money trading forex? As I said earlier, we just want to buy low and sell high, right? For example, let's say the price is at 100, you buy at 100 and sell at 150, right? You make your profit. Just superly amazingly simple, right? So how do we know when to buy and when to sell? It's simple, right? Your technical analysis will tell you this is time to buy and this is what time to sell. Just so simple, as simple as that. So that is why it is important. I will be doing more videos on technical analysis. I will be doing videos on technical analysis. That is why it is important you turn on your notification button after subscribing to this channel, right? So how do we stay profitable in the market? Because making money is totally different from staying profitable in a long run. First of all, one, you find a strategy that works over time. You manage your risk. You plan and execute your plan, right? So let's dive into technical analysis. Let's just so our technical analysis, actually we use TradingView as charting platform, right? Because TradingView is literally the best charting platform you can find out here, right? For now, the best platform you can find out here. So this is candlestick, right? So candlestick is used to measure the price of a currency, right? So each of these candlestick actually, okay, let's go into candlestick. So candlestick is made up of the body, right, the wick, and the shadow. Actually, the shadow is not really important, so focus on the body and the wick. So traditionally we have traditionally it's supposed to be a green and red candle. So green for bullish and red for bearish, but I just decided to change the color here. All right, so let's go deeper right? So we have candlestick, right? So we say candlestick is made up of what? The body. Let me just draw it here, as simple as this. So candlestick is made up of the body. Let me change the color of this candle to green candle. Let's say this is bullish candle. Let's say this is bullish candle, right? Bullish candle. So this is the wick. Right, let me remove this. So we say candlestick is made up of the body, the wick. This is the wick. Right. So we mark this as the body. This is the body of the candle. Oh, sorry for this. Delete. So this is the body of the candle. The green part of the candle is the body. So let's just write body text. This is what? Body. And this is the wick. This side is the wick. Where am I drawing my shadows actually? Okay, this is the wick. Write this as the wick. A wick, candle wick. So the wick actually, how do we spell wick? W-I-C-K. The wick. The wick. So we have the body, the wick. So when price is going up, right, so the candle starts forming from down, right? So this place, we label this place open. This is the open of the candle. Open, open of the candle. I think this stuff looks so small. Let me enlarge the text here to 18. So this is the open of the candle. This up here is the close. This is the close, where the wick starts from. So this is close. Right. So this top here is the highest price got to. The top of the wick is the highest price got to. So we just call it the high of the candle, right? And the down here is the lowest price got to. Oh, the what? Lowest. Low. This is the lowest price got to. Right. So this is the anatomy of candlestick. So we say when price is going up, it prints what? Green candle, and when it's coming down, it what? It prints what? Red candle. So let me put this in red. Right. So the green candle is the bullish candle, while the red candle is what? Is bearish candle. Just so simple. Just so simple. So these candles has the same features. They have the same features. This is what? The features. Just like the bullish. It's just the same. Right? So now with the collection of the formation, okay, let's say the formation of these candles, right, gives us what we call what? Direction, right? If you see this side of the market, right, we have what? Bullish candles going up. You see them? So this means what? At this side of the market, the price is what? The price is bullish because is what? Because why? It's going up, right? We say when price is going up is what? Is bullish, right? Is bullish. And when it's coming down, it's what? Bearish. So this side of the market, we say is what? Bear. bearish. Just so simple, right? So if you see this side of the market, right, the formation of all these candles by the left, you can see that the price is going up, right? And the formation of these candles by the right, the price is what is coming down. So this is bullish and this is what bearish market. Just so simple. So we say we want to buy what? We want to buy at low here, right? So if we want to buy, sorry, let me change the color of this here. So we say we want to buy here at low, want to buy here low, buy low, right? And we want to do what? We want to sell high. We want to sell high. So this is it here. We want to sell at what? At high. Sell. S-E-L-L. Sell. So this is just so simple, right? So the collection of many bullish candles and the collection of many bearish candles is what made up a direction of the market, right? Direction of the market. All right, so we have a lot to discuss, right, on beginners, but that will be a video for next time, right? So right now I'll be stopping here, but by next week I'll be dropping, or maybe before next week, right, I'll be dropping more videos on beginner courses. So you turn on the notification button, the notification as you subscribe, right? So stay cheese, bro. Stay cheese, traders.